what I'm going to do is introduce Anthony, and then Anthony is going to take it from there and conduct the meeting. So our moderator tonight is likely well known to you. Anthony Rollo is a short-term rental owner of 5, I believe maybe almost 6, vacation rental homes on the East Coast based in New York. He describes himself as a driven volunteer. Anthony's professionalism and expertise is becoming well known in the vacation rental industry. He's a valued board member of Host2Host, and I can attest to his open heart and willingness to share his expertise. Thanks for moderating tonight, Anthony.
You're welcome. Sorry, I've been trying to adjust my camera. If anyone's seen me, I've switched cameras and they're all really crappy quality for low light. So apologize about that, but glad to have a good group here tonight. Obviously, we went to the general meeting, so that's out of the way. Good stuff. But we're here for everyone's favorite topic, tax time. I don't think it's anyone's favorite topic. Well, maybe a couple of people. We have actually 3 people here who have been generous enough to come talk about taxes with us. And I think it's probably their favorite topic, but I think a lot of us here are pretty intimidated by it. And we called this the time gotchas, tax time gotchas. And this is the time to certainly be thinking about anything that you haven't thought about in the current fiscal year. And what I'm really happy to know is that we'll be getting a lot of expert information from a few people throughout the evening here. And we'll have a Q&A session. We'll have some polls along the way. And I think it'll be a really good time. So, everyone, every year I wasn't at this last one, but I've heard this is actually one of our best events, and I think it's super important that everyone is obviously compliant, and you're all here because you want to learn. So it's a wonderful thing that you're here, and that we have some speakers tonight that will be sharing a lot of their knowledge, and I'm sure we'll have a lot of questions. So we will ask to hold questions after we have everyone who's here to share some information with us from their role in the tax world. But we will have enough time for that. We've built in a good amount of time. So write them down as you're thinking them, and you're welcome to type them in the Q&A, and then we can kind of refer back to that if you prefer to do it that way as well. And of course, you can also ask it live at the point where we open up Q&A. So with that, I am happy to introduce, based on the order here, Stephanie Solomon. Stephanie, where are you on the screen here?
I'm up here.
Squares. Hey, Stephanie.
Hi,
Awesome.
How are you?
Thanks for being here.
You bet. I think I've attended all of the Host2Host tax talks since the beginning. I enjoy this, and yes, taxes are one of my favorite things. You have to forgive me in advance, though. I have been gone for 2 weeks because my dad was in the hospital, so I was in Florida. My dogs are very needy right now, and they've been all over my lap, so they were pretty noisy. So I apologize if they start whining. I work for Block Advisors, primarily over in the Lloyd area, 7th and Holiday. And I do quite a few rental returns. I usually do a bit over 1,000 returns a year, and probably at least a third of them, if not more, are rentals. Long-term, short-term, and all in between. And I enjoy talking about them, and I enjoy the 2 gals that I've been working with for the past, I think this is our 3rd time together. We really pretty much have everything covered between the expertise between the 3 of us. So I appreciate you allowing me to come and talk to you guys.
Awesome. Thank you so much for that introduction. All right. I will allow Jadra to introduce herself as well.
Hello.
How are you?
Hi, everyone. Very happy to be back. Thanks for having me and Stephanie and Eve. Yeah, it's fun. The three of us, we have a good synergy, I think, in this topic. And I have let's see, part forensic accounting practice and part tax advising and tax prep wing of my business. So I kind of wear multiple hats, but the taxes is kind of where I grew up as a professional. I started my career working for the IRS, so I spent almost 15 years working there. The last, decade or so, I was doing tax audits and fraud investigations. So I have seen the inner workings of the machine, and it, informs my practice now. And yeah, I like to bring that uh, experience and insider knowledge to help everyone else on the outside nowadays. Yeah, and yeah, taxes. I don't know that taxes is my favorite topic of all time, but it's like pretty up there. I am a nerdy fan for for taxes. So yeah, uh, I'm excited to be here. Glad to be asked back again. And yeah, I'm actually kind of surprised because 2023, there's like not a whole laundry list of big giant changes coming down the pike. And that's just real different than it has been for like the last 3 years. So I was sort of surprised. I was like, wow, there's just, there's only like one or two things. Everything else is pretty like mundane and regular. Uh, anyway, so that's cool. But yeah, I have a whole bunch of clients with various flavors of rental stuff, and including a couple of Host2Host members. So yeah, happy to be here. Thanks for having me, and glad to be part of the show.
Awesome. Thank you so much. Glad to have you back. And then last but not least, we have Eve Davis. So Eve, I'd love to bring you up to the stage and introduce yourself.
Thank you. Yes, as Stephanie and Jadra mentioned, this is, I believe, our third year together on the panel, and we do love working together. Um, and I'm happy again to be asked back as well. I believe I was 3 years before the last 3 years. I believe I also was on the panel when we were in person, which was a lot of fun too. I have my own tax business. I started it in 1999 with my husband, and I think that we also prepare about it's over 900, somewhere between 900 and 1,000 returns a year, and a lot of them are short-term rentals. And I myself am a short-term rental owner and member of Host2Host. And I just recently found out I just started being a short-term rental host about 18 months ago. Just found out that I have become a super host, awarded super host. So excited about that.
Good stuff. Well, congratulations to you on that. Thank you for being a member as well. So obviously, I'm sure you guys have a lot of, you guys meaning our audience here, probably have a lot of questions that you're chomping at the bit for. And I think we can kind of kick it off with actually, we didn't do the poll yet, did we? Charity, do we want to do the poll? Is Charity still with us?
Anthony, Charity is not feeling well, and so
Oh,
she has
no.
left, and I don't know how to do polls.
Oh, goodness.
Sorry.
Okay. No, we will not be doing any polls tonight.
You can ask a question and we can raise our hands. How's that?
Yeah, sure. Let's do it. Okay. Well, it's okay. We'll go by here and we'll roll with it. So the question that we had in the poll was, how do you do your taxes? So I'll give you it's multiple choice. The first question is, I hire a professional. So raise our digital hands or our actual hands if you're on camera. Who hires a professional to file their taxes? I mean, that's what do means, I think. Okay. All right. There's a good amount of people here. All right. Those who didn't raise their hand, actually, I guess you could raise your hand too in this instance, but do you do your own taxes, but you use tax software? So probably not primarily using a professional, but using just your own tax software. Anyone here doing that?
It's like we've got 3.
Okay. Thank you. I guess I don't have everyone on my screen. I should adjust that. We're going down here. So hiring professionals, most expensive probably, and probably the safest possibly. Then doing it your own, and then using software. The third one, option is you do it the old-fashioned way on pen and paper. I don't even know if the IRS actually accepts that anymore. But if they do, and you still do it that way, please raise your hand. No one? I didn't think so. I mean, we're all on a Zoom call. Okay. And then, yeah, the last question was taxes. What are taxes? Okay. Hopefully everyone knows what they are. And you may still be mystified by how to do them, and around the short-term rental space, it's ever more complicated. It's because you're running a business, right? It's not just paying from a W-2, which is kind of set it and forget it in the most cases. But all right, so why don't I open up the floor here, and I'd say we have a decent amount of people here. Let's do a. Let me see if I can change my screen so I can see everyone. Let me just change the layout. I can do that. Add it so I can get to see everyone. It says gallery, but it's not letting me choose any more people. Why don't we do a digital hand? Because that'll bring you right up to the top left. So if you don't know how to do your digital hand in Zoom, it's under reactions. So it's that little happy smiley face with a little plus sign at the top of the head. You're going to click on that, and then there's a raise hand. I'll show you how it works. Boom. See, then it takes me right up to the upper left of everyone's screen. And then you can also hit lower. So now I'm not up there anymore. Actually, it just puts me back somewhere else. So who has a question that they would like to ask? We can ask it. You don't have to ask a particular person. If you'd like to, you may. Otherwise, just ask the question, and then we will have our esteemed experts help answer. Monica, first to the podium. Wonderful. Monica, please let us know what your question is tonight.
So
Thank you
thank you. A little off the beaten path, but I got a new tax guy last year, and he taught us about self-employed 401ks, because I was looking for tax advantages in our beautiful city of Portland that taxes us to death. And he was saying that my husband, all of our short-term rental property management income is in my husband's name. And he said we could set up a self-employed 401k and save money for his retirement through that. And then it's not taxable income, or it's pre-tax income, which was brilliant, I thought. But here's my question. I never really know until the end of the year exactly where we're at as far as profits, that you could put in this 401k. I kind of keep track of it through the year, but it has to all settle out. I'm sure a lot of us are in that same boat. So what happens if we put more in that 401k than is technically profited or made? Like, is there a penalty? What happens then?
You need to take it out. And technically it's called a SEP. So I'm assuming some things about what you said.
Yeah.
If you're doing self-employed, you're doing the rentals on a Schedule C, or are you an S Corp?
Schedule C.
Okay, so Schedule C, so you can take 20% of your profit and put that away, in addition to other retirement things. So it's not a 401k per se, it's a SEP, or I guess you could do it simple, but it's limited 20%. And so there is a penalty. You need to take it out. and if you don't know, you just save the money and then you do your taxes, and you have until April 15th
Oh,
or
that's
whatever.
right. I forgot about that. Yes.
So
Okay, brilliant.
it's probably safer to do it that way and save the money and just put it in there. Because you can put it in for the last year, and if you have extra money left over, you can just start putting it in for the next year.
Okay, thank you. Very helpful.
And I also want to add, I agree with Stephanie, and I also want to add that one of the things that I use with many of my clients is to file an extension, and
Mhm.
because that gives you more time to actually earn the money to put in your retirement, because it's not like a regular IRA where it has to be contributed by the due date, by the April due date. You have until the extension due date to put that money in. So it's very advantageous for people like us who have the short-term rentals that make a lot of times have more income over the summer, you know, the busy season, and then you can have the money to put it in, you know, by the October deadline.
Yeah, and you don't have to have a reason to file an extension. You can just do it. But if you owe money, you should pay it then.
Yeah, you still want to pay what you think you might owe by the April deadline, but you have more time to file and to save money for that pension for the retirement option.
And I just want to emphasize what Eva's saying is that it's only the self-employed plans that can go beyond April 15th.
Correct.
The Roths and traditional IRAs and all of that stuff is April deadline.
Yeah,
So,
and there's sometimes some financial places or some places that you might put your money in, they don't understand that. And sometimes I've had clients have to push back and say, no, my tax person told me that I can do this through the due date of the extension. And, you know, I tell my clients to make sure that they understand that this is different. This isn't your normal traditional IRAs or, you know, that kind of thing. So.
right.
That's great. Thank you. Great question, Monica. I really appreciate you bringing that up, and thank you for everyone for answering with great information. Christy, I know you have your hand up. I wanted to go first. I'm going to go back and forth. I'm going to go to the chat, ask a question there, and then we'll come back to you, and then we'll let other people kind of continue to line up with their hands as well. All right. I'll read what Monica wrote just because it's funny. I was raised by an LTCEA who now retired. One of my earliest lessons was friends don't let friends use TurboTax. That's good. All right. So how Jillian, if I'm pronouncing that correctly, is asking, how do you file an extension and what reasons are allowed? That's a good question, because like, isn't there's a deadline, but then like you can extend it. Like, why can you extend it? And like, how do you do that? Thanks, Jillian. Who would like to take that answer?
Sure, I'll jump in. The everybody for your individual tax returns, anybody can have a 6-month extension from April 15th to October 15th. You just have to either fill out the form and send it in, or you know, tell your tax preparer, please send in my extension, and then they will file the form on your behalf. And I actually put the wrong form number in the chat. So the 2848 form that I put in there is actually the power of attorney form. Ignore that. It's a 4868. Sorry. Too many 4s and 8s, and anyways, it's a 4868. So I'll fix it in the chat in a second. But you can, you know, if you want to just file one, you can, you know, get the PDF from the IRS website. Any tax prep software that you use, if you're doing your own tax return through one of the tax prep softwares, has a feature that you can file that electronically. And then of course your professional tax preparer can do that. You just have to call them and let them know. Yeah, and the state, depending on what state you're in, the state will either accept the federal extension as a state extension as well, or require you to, you know, file their own independent form to also have a state extension. And every state's different, so just you know, check on your state Someone asked about Oregon, specifically in the chat, and Oregon accepts the federal extension. So there's basically just a checkbox on your Oregon return that says, yep, I filed a federal extension. And if you check that box, they're like, great, we assume you're extended. They could theoretically ask you to prove it, but I have never seen that happen in my 20 years in this industry or whatever. So I don't think it's likely anyone will come knocking at your door. Yeah, and so there's lots of reasons to file an extension, as Eve was talking about, and but it's pretty easy, and your SEP contributions is a good one. And then also, I guess I'll just echo, because it's nice to hear something more than one time. If you're going to owe, your extension is only an extension of time to file. It's not an extension of time to pay. So according to the government, you still owe them on April 15th, regardless of when you file your tax return. So make sure you're working with your tax preparer or doing the math yourself to figure out how to make a payment with your extension if you're likely to owe for that year.
Yeah, I'm sure that the other two have heard it all the time. Well, I can't afford to pay it now, so I want to do the extension. So that doesn't do that. And in addition, living in Multnomah County and in the city of Portland, you also have the potential of having to do extensions for the preschool for all, the sustainable housing, and the city business tax and all of that. So when we say that Oregon will allow the federal extension, yes. But if you owe Oregon, you do have to get a voucher. You do have to send that extension payment in.
Awesome. Super helpful information. And thanks for clarifying too about having to pay. So obviously having to kind of do some of or most of or all of the work to understand what your obligation may or may not be, so that you're not subject to fees and penalties and all the other garbage you never really want to pay, right? All right, cool. So we're going to come, we're going to switch back to questions that are live, and Christy has her digital hand raised, so we will call on Christy. Christy, welcome to the stage.
Thank you. Taxes, the bane of my existence. So I have 5 properties, which makes it incredibly complicated. And usually tax time for me involves pulling the receipts out of the glove box and going through them all and assigning them to whichever property they are. Logging on to see what utilities I've paid, forgetting my login info, having to reset everything. And so it goes every year. And I'm curious, I know people use QuickBooks, but I don't love it. And I'm wondering if there's just a better way to do it. Part of my complication is I'm in the credit card churning game for travel. I'm a travel hacker. And so I'm constantly going through the credit cards. So I think that complicates it a little bit. So it's hard to pull expenses. And side note, my properties are not in individual LLCs. They're in a trust. And then I just carry an umbrella policy. So is there a better way for me to do this?
Well,
Yes.
I tend to speak a lot. I'm sorry about that. I have a gal that has 23 properties, and she honestly does it on Excel. It makes it easier for her. She does it every month. She reconciles, and so at the end of the year, she's done. It's just so much easier. I know it's a pain, but I know that my cohorts over here believe the same as I do, is if you're going to miss something, you're going to lose something, and you're not going to know. If you do it every month and it's just a routine, you pick a Sunday night, you sit at the kitchen table and you do it, it's done. Or hire a bookkeeper. I mean, that's actually the better course. It's a write-off. So, but doing the monthly thing is, she does it on Excel. I actually gave her a sheet just so, because she was handwriting everything to me. It was making me crazy. So Jadra had given us a little bit of a Schedule E before a couple years ago, and I kind of did something with that. So every month she does it. She puts in her numbers for the utilities and all that, and at the end, it just adds it up on the front page. It's just a beautiful thing.
I agree with Stephanie. I was going to say the same thing. At the minimum is use Excel or some sort of spreadsheet to keep track of those things. Yeah.
Got it. I just need to be more active monthly, I guess. Yeah, time sneaks away. I feel like I just got done with this year's and here I am rolling into the next one.
And Christy, I would
Yeah.
suggest that perhaps you get a separate credit card for that or bank account or something, so it's not bunched in with this other stuff. With an audit, and I'm not the one that used to audit, but with an audit, it's just so much cleaner if you can give them something that's just that. Plus, if there's interest and it's just the rental stuff, then you can claim the interest on it if you don't pay it off for every month.
Got it.
I
Christy,
agree. Yes, the
ahead.
sorry, can I jump in?
No,
The
please. Yeah.
even if you're doing lots of credit card hopping for like point, purposes, you're probably doing more than one card at the same time. So if you're doing like two or more, then just have one of them be, you can hop credit cards a million times if you want to, but just like when you start using a credit card for rental stuff, just keep that rental and use, the other one for your personal family living, travel, whatever other kinds of expenses. So even if you end up with like 10 different credit cards that you've used over the course of the year, if, three of those cards were only business purposes, just like Stephanie was saying, that's going to make your life a whole lot easier. I also wanted to put out there's two like QuickBook alternatives that I have heard about. QuickBooks is a good software because it's ubiquitous. It's just everywhere. And, and as long as you're not trying to connect too many things to it, it works pretty well. It does the thing. And the other two are Xero, spelled with an X, Xero. And that's basically the QuickBooks equivalent in Europe. That's kind of like, the ubiquitous one. I have a couple clients who use it in, just here. But that is an option to explore. And then also, I just learned about a new one called Zoho, Zoho. I don't know why they're all four-letter words, but who knows? Anyway, I don't have any experience with Zoho. I've never seen it, but I was talking to a colleague earlier today who mentioned it, and he said he really likes it for like smaller companies. So probably, your rental properties are perfect. Um, smaller business kind of size, and it's pretty affordably priced as well. And they both can do, link a bank account or a credit card. You can do the reconcile, whatever. It's got all the same online features that are nice and shiny about QuickBooks, and just is a different product. And then the third one I'll mention is just FreshBooks. I have heard mixed reviews about that. Some people really love it, some people can't stand it. So I think it's just a matter of like your personal taste and process and whatever. But that one also exists. So there's three alternatives to QuickBooks if you want to explore them. And then I will put in another plug for hiring a bookkeeper, because they're vastly less expensive than you are imagining. However much you think they cost, it's a fraction in reality. And they save you so much time and prevent so much stress. And they are worth their weight in gold. And, any three of us know plenty of really good, really qualified, really high quality bookkeepers. So I'm sure any one of us can give you referrals if anyone needs that.
Thank you.
Including Kim Bose, who's a Host2Host member. She's an excellent bookkeeper.
Mhm.
Yeah. Anyway, plug for Host2Host members.
Awesome.
I agree.
Christy, I wanted to throw one, and Jadra, I thought you were going to throw it out there, honestly. That was a great list, but maybe put the links in the chat to help other people. One that, so from my experience, we had previously hired a bookkeeping service. It was called Bench. They were really great up until a year and change ago. And we had them handling all of our properties and our e-commerce business that's not short-term rental or real estate related. And because we decided to leave them, we chose a single bookkeeping service just for our e-commerce business. It's a smaller company called Uplink. I can also drop the link in the chat for just our e-commerce business. But for short-term rentals, with a lot of expenses, like a lot, and a lot of money coming in from Airbnb and VRBO and Direct and Stripe and things, we actually use Stessa. And Stessa, so it's assets spelled backwards. There's a free version, that's like the main version. They have a paid version. It has a little bit more functionality. It's relatively inexpensive, but honestly, it's real estate focused. It's a really clean tool. It connects to all your banks, through not Plaid, but the competitive Plaid, whatever that one's called, I forget. But bank grade security, blah blah blah. But it connects all that information, pulls it in, allows you to. It'll auto categorize things. It'll allow you to categorize things that it doesn't pick up. And at the end of the year, you can export a complete file with all of the technical terms that your accountant wants. I don't know what those are, but it's really good. And it's got a nice interface. It's a really quality piece of software. So check out Stessa also.
Okay, and to follow on to that real quick then, say you're going to, the hardware store and you're buying multiple things for multiple properties. Are you keeping the transaction separate to make it easier through Stessa, or are you combining?
Yeah, so with your credit card approach, which I love, we kind of do the same thing too, but we try to keep like one card, or two cards kind of per property. And so yes, if I'm buying if I'm buying something, and I would probably ascribe a certain threshold. So like, I'm gonna buy plumber's putty and it's $4, but I'm also buying, a clamp and it's $10, and I buy, I don't know if you should be splitting them up. Like that's the official word, I would believe. So you'd go, okay, I'm gonna pay this right now and charge this, and I'll pay this and charge this. That's the easiest and cleanest way. And again, if you have card A, with the last four of 1111, that's only for property, A. And then the good thing too, in Stessa, and I believe in QuickBooks, probably Zoho as well, it'll pull in everything from card 1111 and automatically tie it to that property. Because trying to figure that out afterwards, good luck, right? So having that, we have individual cards for each property, or multiples of them, and so we keep them completely set. And they're business cards; they're not personal cards. 100% separate. We do have our properties all in individual trusts, so like they're all very separate in that aspect, and then they all file under Schedule C or E or whatever. But yes, that I would say, from my perspective, I would make sure, like if you go to the hardware store and you had two properties that you were buying things for, just separate them on the the conveyor belt and say, I'm paying with this card, and then I'm paying with this card.
Got it. Thank you.
You're welcome. Okay, we'll go. That was live. We're gonna go back to the chat. Don't worry, Debbie, you'll be up next. Let me go to the chat and see what we got here. All right, I'm gonna scroll up a little bit. We've got some good info. Jadra dropped those links. Thank you. Oh yeah, this is a good question. I think I know the answer to this, but I'm not gonna answer it because I'm not the expert. But let's see. Dude, wait, where'd it go? What happened to this question? Here it is. Okay, Lee and Ann have said, we have 3 cats, and so many guests mentioned them in the review as a reason they love their stay. Also, we have a pre-booking question that asks potential guests to confirm cats in the house are okay. Good idea, by the way. And many folks say it's a reason they choose us. Oh, I really love that. Our photo shows us with a cat. Very appropriate. What can we do to claim the expenses as a business expense? Food, vet bills, insurance. So Eve is answered here, but I'm going to allow Eve to come to the stage and answer live, because I want to know the answer, and I think I know the answer, but I'm not the expert.
Hello, thank you. So yes, this would definitely all be considered personal expenses, even though the stays are guests mentioned they love the cats, but I know that all those expenses would definitely be considered personal expenses if you attempted to write them off. I will say that you had mentioned that you have photos with your cats. If you hired a photographer to make those, to do those photos with the cats for publicity, that cost would be a deduction, I feel. But anything else like the vet bills and the food, no, that wouldn't fly.
Do we have anyone who thinks that it might fly or have any thoughts on that? I see head shaking from the experts of a no. Let me throw something out there as a question that's tied to this. If my short-term rental or I hosted and I had an ADU, and I have a dog, and I have that dog for security purposes to protect me from anything that may happen, would that dog and its accompanying expenses be deductible in a similar vein that we're talking about with the cats?
It's still a personal expense.
So if I bought a dog specifically for security purposes, that would be a personal expense?
It would. I mean, if it's on the ADU, I mean, I think it would be really tough to convince an auditor that if you had a junkyard and you had a junkyard dog in a fence and nobody was there, yes.
Okay.
But if you're living at the same place with the ADU, I think it would be very tough to convince an auditor.
I agree.
Yeah, I agree.
I do think, though, we should advocate for a filter on Airbnb that I want to stay at a place with cats. I mean, that would just be so fun. That could be an enhancement.
Have you ever been to a cat cafe?
Strangely, yes.
Yeah, no, we have them here. I mean, they're cool. We love cats. But yeah, no, I agree. That would be I wouldn't be surprised if they put that in as a filter at some point. But thank you for answering those questions. We'll come back to kind of the follow-up questions of that, or any fun quips. But Debbie's been very patient, and Rob with their digital hand up. Welcome to the stage, Debbie. Don't
Thank
forget
you.
to unmute yourself.
We actually did have a couple of questions, but Rob forgot his already. So. And I wanted to put in a verbal plug for Kim Bose too, who is the owner of Back to Basics Bookkeeping. So Christy, I really highly recommend her. She does our books and she's really good, and she works with all three of these ladies as well. My question honestly was just to ask you, could you explain the new things that have happened this year? What are the new?
Yeah, Jada had mentioned there was two changes.
Yeah, you had mentioned that there were a few things that were happening.
All right. Well, yeah, I'll jump in. So a lot of stuff is the same. All the things that are indexed for inflation that always change a little bit each year are changing, like the standard deduction and require those kind of certain thresholds and stuff. So all the kind of mundane stuff that just goes up a little bit each year because of inflation. All that stuff is doing its usual thing. The tax bracket numbers are a little bit adjusted, etc. But the stuff that I think is more interesting and a little juicier, really the one big change, actually I have two things. So the one big change coming from the IRS is about the 1099K requirements. So if you'll remember, harken back to like a year ago when the IRS was like, hey, everybody, now if you get paid through Venmo or PayPal or one of those like third-party processor things, and you have a business transaction more than $600 for the year, the payment processor is now required to give you this 1099K, and we're going to get a copy and then everyone was like, what? And, had a heart attack. And so the IRS was like, okay, we'll wait a year. Well, now it's been a year. So that went into effect instead of for 2022. It started this year for 2023. So now if you have used any of those third-party processors, Zelle, I don't even remember all of the names of them, Cash App, blah, 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 all of those type of things, if you get paid for your business activity through those things, then you're just going to get a reporting form at the end of the year called a 1099-K. And it's just informational. It shows, how much income that third-party processor processed for you on your behalf. So how many payments went through their system from customers to you. And theoretically, they should not be sending 1099-K forms for personal payments. So if you go to brunch with friends and one person pays with their card and everybody else Venmos, that should not show up on these 1099-K and shouldn't be a transaction that triggers a 1099-K, because it's personal. However, we all know how the world works and how technology goes. And so, if you accidentally created like a Venmo business account and you didn't notice when you started it, I think Venmo is probably just going to assume that all of your transactions belong on the 1099-K. So if you get one in error, you can ask it be corrected, which is sort of a long process and, with varying successful outcomes. It just depends on the organization that you're asking and how big they are and how inundated they are with these kind of requests. And then, there are ways to handle it on your tax return. I don't think I'm going to talk about them because I think if you're having this, you probably should talk to a professional, because I don't want to tell you what I would do, and because there's no way I'm going to be able to cover all the caveats in my explanation. So it's not the end of the world if you get a 1099-K that shouldn't have been reported to you. As a tax professional, you can report it so the IRS is happy and then back it out with the correct kind of other entry on the other side of things. That's not a super big deal. But that, I think, is the biggest thing. So, pay attention to your mail. You may get one of these 1099-Ks. I suspect the IRS is going to get a lot more 1099-Ks than they wanted, and I think it's going to backfire. They wanted information about what self-employed gig people are making money and not reporting it, but I think they're just going to get like way more data than they can handle. So I would just be prepared to pay attention for that kind of thing, and talk to your tax person. If you give it to your tax person, if you have one, and then if the IRS sends you a letter later, then call your tax person and and handle it.
I agree, and I also believe that there's going to be a real possibility of people getting the case when it's personal expenses too. But one thing to make sure of with these 1099-Ks, they report gross income, as Jadra said. They don't take out for the fees and everything. You have to keep track of that. And so I oftentimes have people that have Uber 1099-Ks or Etsy 1099-Ks, and they have to go in and find, in Etsy, how much sales tax I pay, what are the fees, what was the postage, and because they only are thinking they've got the net, so they tell me they made $20,000, and I'm looking at a $70,000 1099-K. So make sure that you keep track of all of the fees that Airbnb or whatever platform you use charges you. An interesting thing, and this was just something that came up during tax season, and I haven't followed it up. But an interesting thing, Oregon was trying to do something with the housing stuff, and they were looking at a bill. I don't know if it passed or not, and it's just because I remembered about it. If you rent for 3 months a room in your house, they're looking, if you do that 3-month tenant thing, to excuse rent from Oregon income tax of up to $12,000. So that might impact Airbnb, because if people can rent it for 3 months and not have to pay taxes on $12,000, they might look at that. Just an interesting thing. I just did a
Stephanie, you muted yourself.
Yeah, we lost you.
Oh, sorry. It was House Bill 3032, and it was endorsed 9-1, and it needs approval from a second committee. And I don't know what happened with that. So just an interesting thing that Oregon, they think it's cheaper to pay people, or not charge tax on people, instead of providing housing, because that would be cheaper for them to not take taxes on $12,000 than to provide a room for somebody. So that's where it came from. Don't know if it'll pass or not, but that's just interesting.
Awesome. Thank you, guys. Let's see.
Shall I jump in with
go
a couple
ahead.
more change thingies? These two are just, completely different topics. So I wanted the others to chime in on the 1099Ks and stuff. So this is not strictly tax related, but I just saw that QuickBooks is going to stop. They're phasing people out of the desktop version of their software. So they've been threatening it for years, and now they're finally doing it. So I can't remember what they said, but I think they're going to stop supporting it sometime next year. So if you are not on QuickBooks Online and you're using a QuickBooks desktop, call your bookkeeper, or be prepared to step into the digital world. So that's more PSA than like tax stuff. But since it's nicer to switch your bookkeeping on January 1 than at whatever miscellaneous point mid next year, that's my Christmas gift to you. And then the third thing I was going to mention was estimated taxes. So if you are not paying your quarterly estimates and then you owe at the end of the year and you send in your payment, the IRS can technically charge you a penalty for not having made your prepayments on time. And for years, as long as you didn't self-assess that penalty, they just would not bother to charge you. Enter 2022 tax year, where all of a sudden the IRS decided they wanted to start enforcing that rule. So I had a whole bunch of clients who, not a whole bunch, but like 5. It felt like a bunch. Anyway, I had more than one client who didn't make their estimated tax payments or didn't make enough of them during 2022. And even though they full paid their tax due before the April 15th deadline with their tax return, the IRS still charged them that estimated tax penalty. And I wrote penalty abatement request letters and got some of it abated, some of it reduced, whatever. But it was, I feel like they've put us on notice now that they're going to start enforcing that rule. So if you're making a profit and you're not sending in your quarterlies, then you're setting yourself up for having to pay some penalties on top of whatever tax that you're owed. So there's my other PSA to you, is to not rest on your laurels and make your estimated tax payments, because the IRS is being intense about it now.
Well, and to add to what Jader said, I agree. One of the reasons the IRS is enforcing it is because it is interest-based, it's interest-driven, and interest rates have gone up. And so, it wasn't as big of a deal to make sure people made those estimated payments, because the underpayment penalty, which again is interest, was really small. And and for me, for instance, because I make my money in April, it made sense to just save my money and pay my taxes. But when interest rate, now that it has gone up, it's not the savings that it used to be. So that's why you want to be more dedicated to pay the estimates.
Thank you for that. That is great. Christy, you had a question, but you said to take Angela's question, but I don't see Angela's hand up anywhere. Angela, are you somewhere on here?
Angela
you have a
took her hand
question.
down. Yeah.
We'd love to have you step up to the stage, Angela.
Well,
Angela,
maybe
you're
we
still on
already
mute. If
answered
you'd
that.
like, we'll be happy to answer a question. I'll slide on over to Christy's question in the chat. And Christy, if you want to clarify after I read it, please do. Christy says, my 16-year-old son is my co-host and I'm training him in all things STR. I'll be paying him a small percentage of bookings starting 2024. And I'm wondering if there's anything I should consider before doing this. He does have another seasonal summer winter job, so this will be in addition.
I'll start with that. So essentially, he's going to be your contract. He's going to be self-employed if you pay him this way. I would make sure that you look at the differences between an employee and a someone that is a contract person, because depending on what you have him do and the time that he works, and if you say he has to be there, work from certain times, he could actually be an employee and you might be needing to actually have him be an employee. So that would be the first thing I would look at, and work with someone to determine all the things that, where you could say he might be an independent contractor, but he might be an employee. And I will say the state of Oregon and IRS wants them to be an employee. So that would be the first thing. Yeah. If he does qualify as an independent contractor, then it would be kind of the same thing as you're looking at expenses. He might not have that much though. And, if he is an independent contractor, he's got to pay his own self-employment tax and all that as well. So.
Thank you. So I should really just speak to somebody. So technically, I guess you're saying he should be an employee, and then what steps to set that up?
Hire a payroll
how does that
person.
impact
Don't do
me?
it yourself.
Yeah, and how does that impact
Yes.
me
Yes.
too?
Definitely hire someone to do the payroll. It
Okay.
gets very complicated. But if he's an employee, then, then you can deduct all the costs. And I will say that just as a guideline, the taxes you pay, the half of the Social Security and Medicare for him, you withhold the other part, there's unemployment, there's a lot of things. It probably is about 13% figure more than what you're paying him, added to the cost for the payroll taxes. So, but of course, those costs would be deductible as well as who you pay to do your payments to the person processing the payroll would also be a deduction.
Thank
Yes,
you.
because depending on how much you're going to pay him, he might have to pay those estimated taxes that they were just talking about. He's required to file his own tax return with $400 of self-employment income. He would be required as an employee to file, if he had tax withholding he'd want to get back, but $12,000, whatever it is for this year. So definitely a much higher threshold. You just have to be really careful, because I had a kid that worked for his dad. He paid him $20,000 on a 1099 and there was no expenses. So he didn't realize that he's paying the income tax on $20,000 plus the 15.3% self-employment tax. And then you have to do, if you're in Multnomah County, then you have to do that business too.
Got it. Thank you.
Also, another plug for Push Your Kid on Payroll is that it gives you some pretty sweet opportunities to do some really early savings for your kiddo, because the requirement for having an IRA is that you have some kind of earned income. And so if you are having your kid and you put them on payroll, W-2 wage earnings accounts for that in a way that self-employment stuff doesn't meet the same kind of threshold. It's just different considerations. But anyway, there's opportunity to talk to your tax person, because there's some cool stuff you can do if you end up with payroll.
He
Um,
does contribute to a Roth already. And I usually match it, not out of, just out of my own pocket, whatever he, will contribute. So yeah.
Yay, that's
Nice.
great.
Also, actually, I do want to mention that because he's your son and you are a Schedule C, correct?
Correct.
You actually would not have to pay the Social Security and Medicare because he's under 18. He can be your employee as Schedule C, and you would not have to pay the Social Security and Medicare for him. It would just be subject to income tax. You'd still have to do all the paperwork, file the quarterlies and a W-2, but that is one advantage. And that's a great advantage to having him be an employee.
And his Roth contributions are the same as yours and mine, correct? 12,000 or whatever it is these days per year.
You mean the standard
6,500?
deduction? Or
No, his contributions to the Roth 401k, like his retirement.
well, if he's your employee, he could just do an IRA, regular IRA.
Okay.
If he was a contract person, then that would be different, yeah. But then you wouldn't have the savings of not paying the Social Security and Medicare if he's not your employee. So, yeah.
Okay. Got it. Thanks.
Is it not true that if and Chris, you didn't mention what his total gross income was, but if it isn't there a threshold of 12,000 and change that if you don't make above that, you actually don't have to file a return?
On the IRS level, you're talking about the standard deduction, yes. For IRS, Oregon, the states are different though. Oregon's way less.
States are different, but if that's only on W-2 income. Self-employment income is different.
Right.
Yeah, I do currently file to get his, tax payments that he's made from his W-2 back currently.
Yeah.
Got it. I mentioned, and Diana followed up in the chat, that using Gusto as a payroll service. So our 12-year-old son is on our payroll as, I guess, a W-2 employee. And he makes less than $12,950 a year, but he's a valid contributor to our business, and it's great. But we use them, and they, it's nice. It's a really clean service, and I probably should have an affiliate link for you. I don't know if I do, but I've been pleased with them.
Okay, good to know. Thanks.
Yeah. Okay. What time is it? Cool. 9. Okay. Wow. We've got a lot of good stuff. I love this. There's another question in the chat. No more hands up. So I'll go back to the chat.
Actually,
So it looks like Angela's back.
Angela's hands up.
Oh,
Yeah.
Oh, sorry. Angela, where are you? I can't see. It's funny. It's like, it's not digitally going up in the corner. Maybe it's because I have only pictures on my screen. Okay.
Yes.
Angela, go for it. Welcome.
Hi,
Welcome
good.
to the stage.
Thank you. I am sorry. Actually, I am moving about the cabin. If you want to answer, if you can go to the next question asker, and then I can come back. I just want to make sure I'm still and not huffing and puffing.
Sure thing. Sure.
I know we're wrapping up, but I do need like 60 seconds to get to where I am.
You'll get it. Don't worry.
Okay.
All
Thank
right,
you.
Angela, you're welcome. Come back to us when you're not huffing and puffing.
Okay.
All right, so I'll go
Okay.
to Tamara Goldsmith's question in the chat. I'm looking to sell a house soon, uses a long-term rental, and purchase a new one for a purpose of a short-term rental in Portland. Can you speak about 1031 exchanges? Ooh, and how that might avoid the capital gains tax? Not really avoiding it; it's pushing it down the road. But I may not be able to, considering the ASTR permit rule about having to live in the home 9 months out of the year. But what about renting a room in the house to a full-time manager of the Airbnb short-term rental, and then renting the remainder of the house out as a short-term rental?
Well, 1031 is a great way to avoid the capital gains. Basically, you take the basis you have left in your property that you're selling, and you move it to the new property. So you don't get to depreciate, the full value. But you don't pay capital gains tax. That's really the shortest answer I could come up with for that. There's intermediaries that help with that. You have to identify the properties. There's a whole bunch of rules with it. But that said, as long as it's an investment property, I don't know. I'd have to research it, but I mean, that's an innovative way of doing it. It's still being an investment property, and it needs to be at least for the first year to qualify for the 1031 exchange tax deferral. That's a really short answer to that question.
And also
That's a
really
very
clear.
good point.
Good job.
Yeah, that was boom.
Yeah. That's a pretty complicated question, I think, to answer here real quickly. It would definitely be something to whoever you have doing your taxes, even if you don't, to have a much longer consultation about that.
I'd also consider hiring a 1031 expert, whatever they're called, but to help you with an exchange when you're ready to do that, because there's a lot of rules associated around that.
Yes, always use an intermediary. It's the cleanest way to do it, especially if you've never done one before, because they'll just walk you through the process and do all the heavy lifting.
Yeah.
Yeah. A lot of layers in that question. I agree with Stephanie's beautiful summation and Eve's recommendation to have a longer conversation with your tax person.
I think technically, because this kind of brings in the short-term rental rules of Portland specifically. You know, I have a type B permit, and it seems like maybe you're considering a larger than 2-bedroom home, and to avoid the 1031 issue of having to live in the property, you would put a manager in one of the rooms and rent the rest out. And, you know, you can actually do that from a permit perspective too. If you do go for the type B permit, I know somebody that does it themselves. You just lock off that one room and they're the manager on site, and then you could rent the rest of the house out, just from kind of the permitting perspective of this question.
Awesome. Angela, you popped back up there for a second. I'll let you jump in front of me. I have my hand up to ask the question too, but Angela, if you're ready, come on down. Welcome to the stage.
Hi. Okay, so I'm a first-time Airbnb host, about 8 months in. I started off doing well with my bookkeeping. I got a little behind. I heard the conversation about QuickBooks versus just an Excel spreadsheet. I am curious though, because I have a business account, have a business credit card. So for the most part, I try to keep all those expenses in that account or with that card. But there are times where I do purchase something with my personal account, or for example, my utilities. So from a bookkeeping standpoint, even though it's not running, some of my transactions are not running through my business account, I can still log or track those expenses so that I can consider them or account for them as a deduction, correct? Okay, I just wanted to make sure, because I don't know, I just thought everything had to be in my business account, and while I tried my best to do that, there were times where I had to use my personal card, and I would just make a separate transaction for my personal items to try to keep it clean that way. But yeah.
I think that's great. I mean, you're gonna, like you said, utilities. I mean, that's gonna run through you anyway. So that's fine. Just keep good records of the stuff that's not through there. You want to keep good records regardless, but the stuff that's not through there, just so you can show that it's not a personal use.
Okay.
That would be for an audit or something.
And what's the percentage that I can write off for utilities? Will my QuickBooks software, I'm not QuickBooks, I'm sorry, TurboTax, or will they?
I apologize. I don't use TurboTax. I don't know what it does. I know it does really bad things when people put in some numbers though.
Okay.
But basically what you're going to do is you've got this whole house. Let's say your house is 1,000 square feet. You have 200 square feet of a room that you're doing. So 20% of your house be 20% of your utilities and all that. And then it's also dependent on how much you rent throughout the year, because then there's some kind of rules about that. You know, you can't just rent it for 20 days and take 20% of your utilities for the year. So.
I do need an accountant, basically. And then my other question, you talked about the benefit of having a bookkeeper. I mean, there's still work on my end though to feed that individual the information that they'll need to track, right? So it's not like I get off the hook for. And how do you best suggest? What's a good strategy to help your bookkeeper help you?
I'm not a bookkeeper at all. I do taxes totally, and so maybe someone else can, Eve or Jade, can key in on that.
Sure. I also don't do bookkeeping in-house. I, refer that out to some wonderful people who do that. But I would say in general, even if you're keeping your own books throughout the year, having a bookkeeper that helps you set up your bookkeeping system and trains you on how to do the inputs in the first place, even if you're going to be the one who's doing it every month, um, is really valuable to have that person, in your corner that can answer questions for you and help you. One of the biggest challenges of bookkeeping is setting it up correctly in the first place, because it's kind of like if you've ever tiled a floor and you get like 1 millimeter off on your first row of tile, and then all of a sudden you're like, why is there 3 feet difference across the room? So, it's kind of like that. If you set it up correctly, then it's a lot easier for you to manage if you want to manage your own bookkeeping. Otherwise, you may find that you love to hand that off to somebody else because it's glorious to have someone else do your bookkeeping for you. It's great. I highly recommend it.
Yeah, I agree. That's why I said I started off great. At least I am great in my head, and kind of trailed off. And so, I mean, I use QuickBooks, but it's expensive, and I'm ready to cancel my subscription. $30 a month, it's a lot right now. So I will look into that and try to maybe adjust for the new year, my strategy around tracking expenses. So thank you all.
Yeah,
Angela-
and again, Excel at least I think would be this or some sort of spreadsheet. And one of the things that I would suggest when you were talking about your percentage of utilities and things that you pay for yourself personally, at least in the transactions, act like you're paying yourself back. Whatever, figure out how much that percentage of those utilities will be. Like Stephanie and Jada, I think both had mentioned that you have, you can look at the square footage, the square footage of your house, the square footage of what you're renting out, or you can even do it by room. So you have 5 rooms in your house and 1 room you rent out or something like that. Whatever method you use the same method, but make sure that say it's 20% or whatever the percentage is, just keep track of that every month. And, whatever you pay personally, you can reimburse yourself, at least on paper, that amount. So it's in your spreadsheet.
I like that approach. Thank you.
Don't forget to check the chat, Angela, for some of the recommendations of different solutions that are lower cost than QuickBooks. And I honestly, personally, like Intuit drives me bonkers. They actually just got rid of Mint, which was such a lovely thing back in the day. That's what they do, kill things. Sorry, I don't like them.
They do. They ruin it. They're ruiners.
They
okay,
really
you can
are.
say it out
I mean,
loud.
I got so upset. But yeah, check out the other ones. Like I mentioned Steph, I really like it. It's really good, and it's 100% free. Like for the normal version, it's really great. It's very powerful and easy to use. Yeah, and then you can catch up pretty quickly.
Will these notes be included with I know we get the playback link, but I don't know if the notes are always included. Otherwise, I'm going to jot down really quickly what I see here. I'm just curious.
Yeah, there's a way to, let's see, I don't think they've changed in here. Let's see. There's in the chat, go down to the bottom where like as if you were typing a message, and there's a little box, there's a little the ellipses, and it says more, click on that, and it says save chat. And what that'll do is it'll save it in a little folder, and it'll show you can click show in folder, and it'll be there. So you'll be able to save all that stuff there. I'll do that at the end if I can remember, so that we can include it in the show notes. But Yeah, that's a good one.
Thank you.
Let's see. Okay, we have, let's see, this is I have a question, but then I was gonna, let's see, we'll go to the format is, well, this is not a question, this is just Jadra's position. Don't use TurboTax. It's very confusing and people end up down a weird rabbit holes that don't apply. If you're doing your own return, recommending Free Tax USA. So there's a good heads up. Includes all the forms and schedules you need and intuitive, user-friendly. Also free to file your federal return, about $15 per state. So that's a good one. Thank you for that.
Side note,
Oh, yeah, go
side
ahead.
note really quick that I didn't put in there. It doesn't file any of your local tax returns. So it will not do your none of them will. None of the personal ones. So it won't do your Multnomah County, Portland City, rental business license, et cetera, et cetera.
Good heads up. Thank you. So my question, I'm kind of throwing it out there to see if anyone has done it and have heard about it or plan on doing it. It's about a cost segregation study. And I'm not an expert on it, but I'd love to see if someone who is or enough of an expert on it to talk about it, since advanced depreciation is slowly ticking down each year. This year it's only 80%, but again, I'm going over my skis. So an expert, please talk about cost segregation in particular to short-term rentals, please.
Yes, I love this. I have had clients who've done it. The first thing I want to say though is that it's not like a magical silver bullet. So don't automatically go do that because you heard on some podcast that it's like the greatest hot new thing, whatever. It may not be the right choice for your situation. If it is the right choice, it can save you a lot in tax. If it's not the right choice, then it can cost you a lot in future years. So what a cost segregation study does, I'll just like explain what difference it makes. So when you buy your rental property, when you place that in service, then you get to start claiming depreciation on that. And what a cost segregation study does is takes a really thorough look at all of the components and parts and pieces of your rental property, and it breaks it down into its component parts. So you've got the property itself. Land, of course, is never depreciable, but you've got the property itself, and then you've got some of its components. And the reason that that can be helpful and matters is because some of those things have a different useful life than the property itself. And a rental property is 27.5 years. That's the useful life of the property itself. Other things have shorter useful lives, anywhere from 5 to 15, depending on what flavor of asset it is. And so when you do a cost segregation study, you can then move some of the cost out of the 27.5-year bucket into some of these other buckets and get them depreciated in a more accelerated manner. And it basically results in giving you a big giant depreciation deduction upfront rather than quite so much ratably over time. Now, the consequence of that is that you're using some of that deduction now that you could use in future years. So you're borrowing from your future self a deduction to claim now. And that's not always a good choice because it really depends on when you're earning the revenue. There's a principle in accounting called the matching principle. And you don't need to be an accountant to just understand that the theory is accountants are trying to get the expenses that it costs you to make the money into the same accounting period as the money that you're making. So if you're not making any money on a property right now, but you have this big giant deduction, then you have a loss for no reason. And then in the future year, you have income with no offsetting expenses. So that's the position you don't want to end up in. So it can be a really cool mechanism to cut your tax down in the year that you use it, the first year that you put the property in in service, but it's not always the right choice. And they're also, you know, it costs money to get a cost segregation study, so it's probably a couple $1,000. But honestly, if it's the right choice for you, paying $2,500 or whatever to someone to do the cost segregation study could save you tens of thousands of dollars in tax. You know, so if it's the right choice for you, it's well worth the cost. And of course, that cost is deductible. You know, it's fine. It's just part of the whole package. But that's kind of cost segregation studies, you know, 101.
Thank you, Jadra. Very helpful. Christy, you have a question. Come on back on stage.
Sorry, I feel like I'm hijacking this. Kind of along the same lines, I don't know a lot about this, but would love to hear it. I know that there's a short-term rental loophole for kind of not being a real estate professional, but being an active participant in the management of your rentals, which I think, I could be completely wrong, helps reduce your taxes somehow. And I don't know if you guys know about that, but I'd love to hear a little bit more about that.
It's called qualified business income deduction, and it can save you money if you have a profit. So if you have a profit, then you can get that. Now, keep in mind that this theoretically is only around for one more year. And then 2025, the tax law goes back to 2016, 2017, depending on what Congress does. But as it's set up right now, next year should be a really fun meeting, because I imagine we're going to have a lot of changes. But the tax law, Tax Cuts and Jobs Act, initiated in 2018, is only good through 2025. So qualified business income deduction, the 20%, that all theoretically can go away.
Okay, I did not know that.
Also, I want to add there's also, I guess, if you want to call it a loophole, when you have short-term rental properties, if the average stay is less than 7 days, and you meet all the other qualifications of, you know, materially participating, you could, that again, the average stay needs to be less than 7 days. It could be considered non-passive, so you could actually take a loss. You know, and I'm not talking about the normal loss where you know, the 25,000 that you can, that kind of thing. So there's a lot of, and that's again why it's great to have a professional to work with, because there are all these things that work together and move in and out. Yeah.
Yeah, that was the piece I was talking about, the
Yeah. Mm-hmm.
less than 7 days.
Yes. Average less than 7 days. And, you know, hopefully you don't have a loss, but if you do, you can use that against, say, your wages, as opposed to only against other passive income.
Can I just piggyback on that? So, I actually don't own my property. I kind of fell into this this opportunity, and I know like rental arbitrage is a thing, and I didn't seek this out. My landlord has these buildings where there's a studio unit on my first floor. It has its own private entrance, and when I was looking at the place, he said I can use it for myself, or I can rent it out. And I'm like, you mean I can rent out your space that I'm renting from you? And he was like, yeah, basically I rent the entire building, but all the profit that I have from the Airbnb just really helps me offset my rent. So I'm not really trying to profit from this business. So I am curious if that tax qualification is for homeowners versus renters, and what should I be? Well, first of all, if you can put your contact information, I'd love to hire somebody on this phone for my tax preparation next year, because I think it's going to be a doozy. But I am curious, like, what are some of the things I need to keep in mind as a renter of a unit versus a owner of a unit?
Well, I will say that, I mean, mainly the only difference is that you wouldn't be taking depreciation because you don't own it, but all the other costs and all the other things pretty much would be the same.
Okay, that's good to know. I didn't know if I was at a huge disadvantage or deficit as a renter. Okay, thank you.
Thanks. I know all of us here could continue to probably talk for a long time, and I want to be respectful of everyone's long time they've given already tonight, and certainly thank our speakers. I did want to give them one moment each to again, just drop in the chat their information. Of course, that'll be in a follow-up mail as well, and if there's anything, any particular offerings this year that they wanted to promote, we'd love to have them do that in this forum. And then I will quickly pass it over to Davni for a closing statement, and then we will say goodbye. But stick around. But please, Jadra, since you're at the top right here, I would love to ask you to just close up from your portion, and thank you again.
All right. Oh, what a pleasure. So fun to be here and talk tech stuff with you all. Absolutely. Thanks for having us. Yeah, we will see what Congress does over this next year. And yeah, 2025 might be a really exciting year. Yeah, I will plug one more time, doing your bookkeeping contemporaneously, which just means throughout the year as it's happening. But also that's a really fun word. So there you go, my gift to you. And yeah, bookkeepers are worth their weight in gold, and they don't charge it. So they don't charge gold, I mean prices. So I highly recommend that. And also tax preparers, we exist for a reason. It's sad, but the tax code is just needlessly complicated. So yeah, last two things, funny things. So passive income, which is rental income, unless a bunch of stuff applies, is just one of the most complex things. Even IRS employees, the training for passive income activities is a week long. So there you go. That's some perspective. And then yeah, I'm very anti-TurboTax for a lot of good reasons. And we had a saying when I was an IRS auditor, we called it the TurboTax tragedy, because you can look at a tax return, if you are a professional, I've seen enough of that, you can look at a tax return and tell that it was done in TurboTax because it's just got some particular signatures. So please stay away from TurboTax. There are many alternatives. Use them. Thanks for having me.
Stephanie, you're up you're right next to Jadra, so you're up.
Okay, well, I will say that I happen to love TurboTax, and I will tell you why. People don't know what they're doing. I've had people put depreciation on their Schedule A back when we had the 2% thing. When they get audited, there's no little TurboTax audit building to go to, so they come to me. And they pay me a lot of money to handle their audit. And those people they're the most loyal clients I have. They will never go anywhere else. They'll follow me wherever I go. They've moved off and we still do taxes together. I probably got a dozen of those people. And that's what TurboTax does for me. But yeah, I mean, really, I think if you choose any of us, I think we're all pretty equal. I mean, I've worked with these gals for 3 years now, and I think we have the same or similar levels of knowledge. So I think you'd be fine any way you look at it. But I know that we can all save you money. If you're on a W-2 and a single person, 16-year-old boy doing the tax return, no problem. You can probably get away with doing it pen and paper. But anyone who has any complications, I know we can save you money above and beyond the cost of the tax prep. So, and we do any new clients that come to us, my boss just sent me a text message saying that I usually do the 10% off. So mention Host2Host and we can do the 10% off new clients. And, you know, we can answer questions, any of us. I think we're all equal. So it's a pleasure being here. And I do love talking about taxes. I'm really looking forward to what Congress is going to change. You know, we just have so little change this year. It's so weird after the years that we've had since COVID, that since 2018, all the changes, you know, all we have really to talk about is a few things in energy credits. You know, that's about it. So we've got some fun stuff coming up in the next couple of years. So it was nice working with you guys, and thanks for having us.
Thank you. Thank you. All right, Eve, floor is yours.
Thank you. And I'd like to say, yes, it's great working with Stephanie and Jadra again. And I agree with what, you know, that I think that all of us, all three of us, we have some great experience together and knowledge together. And any one of us, I would certainly recommend Stephanie or Jadra as well to do your taxes. And I put my contact in the chat, and I also offer 10% discount to Host2Host members. And so thanks again. And we do have just this short little period of time where things aren't crazy, and they'll get crazy again. So.
That's a fact. That's a fact. Well, thank you all. I was going to pass to Dabney. I'm not, because Dabney lost signal, but we're going to pass to Debbie. But before I do that, I just wanted to say, well, we still have a good amount of people here. If you like talking about things in addition to taxes and other things around short-term rentals, like we do a coffee chat for members every week on Wednesdays at what time is it? It's like 2 o'clock my time. So 11 o'clock. No, is that it? Yeah, it's 11. Okay. I'm like, what time is it? But they're really great. We all get together. We talk about this. Sometimes we talk about taxes. I mean, not all, but we talk about other things, and a lot of things, all things around short-term rentals. So come on down. And if you're not a member of Host2Host, Debbie's going to tell you why you should be. Go ahead, Debbie.
Well, I don't know that I'm going to do that, but it's certainly, I mean, I just want to first address that again. This is like the 5th time we've done this. No, you know, actually we started doing this in 2014. So it goes beyond Host2Host. You guys, thank you so much for doing this every year with us. It's just really delightful. And I really value what your input is into our community. It's really wonderful. Also too, I'm just going to close with 2 things. One, I'm leaving leadership of Host2Host at the end of this year. I'll still be around. I'm just not going to be in a position of responsibility. And I have to say that it has been an amazing 10 years. And you guys have all become friends and family. And so I just thank you so much for all of the wonderful interactions that we've had. And we're having one more next month. We're going to have an in-person holiday kind of gathering. It's not going to be formal or anything, but that will be coming out soon. Charity will get some information about dates and times. We've almost got it locked down, but it will be happening sometime before the 18th of December. So probably a Wednesday or Thursday the week before that, but we'll let you know. And I really hope to see you there. Thanks, you guys. It's been awesome. So
thanks,
I think
everyone.
Thank
Can
you.
I quickly make a quick announcement if possible? I'm the vice president of EDI at Travel Portland, and Host2Host is one of our amazing partners, and we're having our open house on December 6th. Debbie, maybe I can send you the information for members. Register if they choose to come out. For those of you who may wonder what Travel Portland does, but you know, you all help to fund our ability to market the destination and drive visitors here, which has been really challenging lately. But just know that our short-term rentals are a significant portion of our occupancy taxes that we collect. So I just wanted to quickly hop on and say that, because you are a part of our ecosystem that I'm also a part of here. So love to see some faces come out and tour our building or tour our office and meet our staff. So I'll share that with you then.
Great. Thank you, Angela.
You're welcome.
Travel Portland is dear to our hearts. So
Yes,
Like-
thank you very much. Awesome, everyone. Well, make sure you're a Host2Host member. It's really inexpensive, and its value is weighted in gold. We'll see you
Thank
guys
you,
on the
Anthony.
next event and coffee, and have a great night.
Thank you. You too.
bye,
Bye,
everyone.
everyone.
Thank you.